Ladies and gentlemen, good day and welcome to the Jyoti CNC Automation Limited Q4 FY'25 earnings conference call hosted by Equirus Securities Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Harshit Patel. Thank you and over to you, sir.
Hi, good evening everyone and welcome to Jyoti CNC's fourth quarter FY'25 earnings conference call. We have with us Mr. Parakram Singh Jadeja, Chairman and Managing Director of the company. Sir, if you can start by giving your overview on the fourth quarter performance as well as outlook for FY'26 and beyond, and then we will open up for Q&A. Over to you, Jadeja, sir.
Thank you, Akhil. Dear investors, good afternoon to all. This would be our second yearly results since the launch of our IPO. As I had expressed earlier also, we can fragment Jyoti's journey into 3 phases. Number 1, establishment. Second, sustain. And third is grow. Since the inception of the company, way back in 1989, the initial phase was learning phase, from where company has grown from a tiny startup, thriving to find its space in a machine tools industry. From that, a small foundation-driven company, Jyoti has slowly emerged as established SME and gradually emerged as one of the leading machine tool builder of the nation. Slowly, it has become the professional-driven entity from the founder-driven management. Finally, we are carving the way ahead to make Jyoti a people-driven institute which will run for the generation to come on the strong fundamentals of our core values. Friends, this would be my 5th investor call since launch of our IPO. At this juncture, you would have many questions with respect to financials and business of the company. Surely, I will be addressing the same in the next part of this, our call itself. Since we have gathered in mass today, I would be glad to share the long-term strategic insight for the road ahead. Jyoti is on the way to build a strong foundation as a concerned business house that belongs to Indian manufacturing fraternity. Machine tool industry being the mother industry for the manufacturing, we are well prepared to contribute to the nation initiatives of Make in India and subsequently would contribute to the GDP of the nation. It is the fact that a manufacturing in any nation can only grow where the machine tool industry is in a mature state. For example, countries like Japan and Germany have marked their dominance in manufacturing because they have a well-matured and advanced machine tool industry driven by innovation and technology. It's now a time for India to mark this strong manufacturing footprint through innovation and technology at driven machine tools. We had envisaged the strong industry pillars like aerospace and defense, automobile, general engineering, and industrial automations would flourish in India and will enable us to become a manufacturing hub globally. Our aspiration to cater the aerospace and defense industry can only be fulfilled with the technology and innovation. This was the reason behind our acquisition of Huron in France, which gave us access to the most advanced 5-axis precision machining. In the same way, we had anticipated way back in 2015 that India would become a next manufacturing destination after China for electronic manufacturing, and hence the relevant product development were initiated by our R&D team, which has paid us through our back-through entry in emerging EMS ecosystem in India. Till today, the foundation of Jyoti was built on its strong mechanical expertise base. The company has producing the high precision mechanical components and machine for decades. As our long-term business strategy, we would like to build our strong footage in mechatronics and not only a mechanical aspect of manufacturing. Now we are building our championship in electronics also. And hence we have already initiated the manufacturing activities and design and development of a servo motors, servo drives, various electronic sensor, PLCs, controllers, which will enable us to manufacture the industrial automation and robotics in coming days. Subsequently, this developed expertise in electronics field would also help us to cater emerging semiconductor industry in India. Being a responsible corporate house, we are equally concerned about the sustainability. The company is determined to have a net zero carbon footprint within the next couple of years through various Go Green initiatives. As a part of diversification, Jyoti is also exploring opportunities in various solar energy related manufacturing activities, which is currently being catered through imports from China. We foresee a huge surge of demand from this industrial sector, which cannot be ignored by an engineering company like ours. Finally, in line with our Vision 2025, we are producing the highest quality, the lowest cost, easy to use a product for our customer that integrates innovation and technology. The lower manufacturing cost is already reflected through higher margins in our March 25 results. Now let me go through the financial of Q4 in FY 2025. First, let me take you through the financial of Q4. Revenue, we have clocked the consolidated revenue of 576 crore in Q4 FY25 as compared to the 450 crores in Q4 FY24, delivering the growth of 28%. At EBITDA level, we have clocked the consolidated EBITDA of 178 crores in Q4 as compared to the 134 crores in Q4 FY24, delivering growth of 33%. The EBITDA margin has increased to 30.9% in Q4 FY25 as compared to 29.7% in Q4 FY24. At PAT level, we have clocked the consolidated PAT of 109 crores in Q4 FY25 as compared to the 100 crores in Q4 FY24, delivering the growth of 9%. Our Q4 FY25, a consolidated revenue from operation of 576 crore consists of 44% from the aerospace and defense, 23% from auto and auto components, 23% from general engineering, 4% from die and mold, and 6% rest others. Our Q4 FY'25 order intake comes to 530 crores, which consists of 29% from aerospace and defense, 33% from auto and auto components, 26% from general engineering, 5% from die and mold, and 7% others. Our total consolidated order book as on 31st March 2025 stands of 4,346 crore. The industry segment split for the same is 39% from aerospace and defense, 17% from auto and auto component, 19% from general engineering, 16% from EMS, 4% from die mold, and 5% rest others. Now, let me take you through the consolidated FY 24-25 performance of the company. In a revenue, we have clocked the consolidated revenue of 1,818 crores in FY'25 as compared to the 1,330 crores in FY'24, delivering growth of 36%. At EBITDA level, we have clocked the consolidated EBITDA of 491 crores in FY'25 as compared to the 301 crores in FY'24, delivering the growth of 63%. The EBITDA margin is 27% in FY'25 as compared to the 22.5% in FY'24. At PAT level, we have clocked the consolidated PAT of 316 crores in FY'25 as compared to the 151 crores in FY'24, delivering growth of 109%. Our total consolidated revenue for FY'25 stands at 1,818 crores. The industry segment for split for the same is 45% from aerospace and defense, 23% from auto and auto components, 20% from general engineering, 5% from EMS, 2% from the die mold, and 5% rest others. Let me quickly brief you because many people may join and new people. So many a times I made this presentation, but let me have some quick view on that. Incepted in 1989, Jyoti has grown multifold. Jyoti has its subsidiaries, offices in France, Germany, Canada, and Turkey. We have two manufacturing plants at Rajkot, at measuring 253,000 square meter, and one at Strasbourg, France, at measuring 46,000 square meter. In this journey, so far we have designed and developed 200 plus product variants and have sold approximately 135,000 plus machines across the globe. Our order book today stands at 4,346 crores, and we have been installed the capacity of a 6,000 machine at Jyoti and 120 machines at Huron. Let me go a little bit back. Let's say in 2007, Jyoti acquired a French machine tools company, Huron, which is catering precision CNC machine of aerospace and defense industries. In 2008, we established the R&D center called Leonardo da Vinci Center at Rajkot. In 2016, Jyoti designed and developed the 5-axis multitasking machine in partnership with IIT Chennai under the Indian government scheme from Department of Heavy Industries. In 2017, we launched 7sense as an Industry 4.0 tool and a platform, as well as the KX300 machine for aerospace industries. In 2019, we launched an artificial intelligence AI system named Protect for machine collision prevention there. It's a real-time collision prevention. In 2022, we launched a VST 160 machine to cater of EV vehicles. In 2024, Jyoti got listed on NSE BSE exchange on January 16th, 2024. In 2025, we have launched 7 new products in January 2025 in Imtex exhibition there. Jyoti has an experienced board and highly skilled management team to drive the strategic of the company for the next leap of a growth. We have a fully vertically integrated manufacturing facility such as foundry, machine shop, sheet metal shop, paint shop, sub-assembly and assembly shop, which allows us to manufacture all the manufacturing components and sub-assembly, critical components and sub-assembly at Jyoti, reducing dependency on external supply, particularly from the imports, and bringing operational efficiency over here. At our R&D, we have designed and developed 200 plus product variants across 44 product verticals, which with our continuous focus on R&D, we are able to provide a customized machine and technical solution to our customers. In terms of manufacturing capacity, we have 6,000 machine install capacity at Jyoti and 121 machine at Huron, France. Total land of Jyoti is close to 237,000 square meter, and France we have a close to 46,000 square meter. And we'll have still more lands are available to further grow from here. Our subsidiary Huron is a technology backbone for us. It is located in Central Europe, which is a hub of machine tool industry in the center part of Europe. We got an access to simultaneously a 5-axis technology through Huron. We are able to cater to the European market through our subsidiary Huron. We have marquee customers based in aerospace and defense industry through Huron products. We have a strong sales and distribution network, a pan-India, having 29 sales and service offices across 12 states. Since inception, Jyoti Huron has installed 135,000 plus CNC machines in more than 60 countries across the globe. We catered a CNC machine to 12 industry segments, which includes aerospace and defense, automobile, electronic manufacturing, railways, die and mold, infrastructure, oil and gas, healthcare, valves and pumps, power, and agriculture sectors. We classify our product range in 3 categories: entry-level, mid-range, and high-end machines. Our entry-level machine range we consider from 0 to 50 lakhs. Our mid-range machines from 50 to 2 crores, 50 lakhs to 2 crores, and our high-end machine range from 2 crores to 20 crores. Some of our key clients in aerospace industries are Airbus and their ecosystems, Turkish Aerospace, HAL, GE, in China, all AVIC group of industries, TASL, in India, TASL, Bharat Forge, etc. Our clients in automobiles are Tata, Mahindra, BMW, Mercedes, Audi, Volvo, Volkswagen, etc. There are many such marquee clients in general engineering and other segments. We have received for the 7th consecutive year in the award for best brand in the metal cutting industries by Economic Times. Received the award from IMTMA in 2024 for the exports performance. So these are our recognitions in India over here. Let me explain you about the global machine tool industry. The global machine tool consumption of the machine tool is close to 80 billion. Currently, India as a consumer ranks 6th with $3.9 billion in a consumption. by 2030, India is expected to enter in the list of 3 global consumer of machine tools. Going ahead, we continue to stay focused and grow our business revenues from aerospace and defense, EMS, automobile and general engineering, and in future, we are looking towards to entering into a semiconductor sector there. Going forward, our strategy enablers will be a people development, a product development, a market expansion, manufacturing capacity expansion. In the people development, leadership development being our prime focus, our center of excellence, is fully operational now. And many of the call I have given this input that the biggest challenge we are going to see on our growth path is a skilled manpower. And for that, we have made this our center of excellence. In the last quarter, we have close to 325 people has been trained on our center of excellence over here. In a product development, in 2025, we have designed and developed and launched following new product variants. We call it as GU8. Is a 5-axis gantry type machining center. AWT22 is alloy wheel turning machines. BTM100 is a twin spindle gantry automations. ATM200 inverted turning center with automations. HP 4000 and 6000 high performance series of a horizontal machining center. Techion Beta is a 5-axis high dynamic machining center. And HUMA is a future of human machine interface. Recently, we have registered the patent for a HUMA and we got the patent rights over there. HUMA is our operating panel for our machines there. In terms of a manufacturing capacity expansion, we have just completed, let's say in the last quarter, 6,000 machine per annum has already completed. And in this quarter, we have close to 90% of this facility been clocked in terms of a utilization level there. Further enhancement of additional 10,000 machines per annum will be completed in the next 2 years. Thank you very much. And now we move forward to our next question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Oswal from Nirmal Bang Securities Private Limited. Please proceed.
Yes, sir. Thank you for the opportunity. My question on our capex program of 10,000 machine. So first of all, how much amount we need to incur for this expansion? That's the question number 1. And the subset of this question is, sir, we have a currently order book of 4,300 crores and you are outlined the almost 12 industry where we are catering. So based on the demand and user demand outlook, how do you see the execution of this order book and the overall revenue growth for the company 26-27? That will be quite helpful.
Okay. So let's say about first your questions on a capex. Actually, on my last call, I have given the numbers is close to 400 to 450 crores. Capex are going to be on this additional 10,000 machines of a capacity to be built over here. And your second question about the order book. Let's say today what you said is at 4,300 crores. And today let's say the capacity is close to now 6,000 machines is going to be a bottleneck for us until this new capacity will come to utilize over there. So we will try our best in execution over here to utilize this year to be maximum this our capacity and executions over there. So we will overcome this all our order book and try to do our best over there.
Okay. The second question on the cash flow side, sir. The cash flow, operating cash flow is negative, and if I look at our balance sheet, there's a sharp increase in the trade receivable as well as the other financial assets. So when you see our growth is translating into a cash flow generation also, so can you comment on that, why it is not reflecting in financials so far, and
basically,
how it will change?
Yeah. So basically, it's a let's say we are growing on a very long-term manufacturing cycles on a large machine on aerospace and defense. And in the last quarter, subsequently it has been improved and dispatch has been happen and all as in the last moment. So there is you are able to see in debtors levels and all, it has sharply been increased because it happens on the last quarter and last month. So we will see this has been cooled down in coming days, and we are targeted at the positive cash flow in the end of this financial year of 26.
Okay, sir. Thank you very much for answering all my questions. Thank you.
Thank you. The next question is from the line of Akshay from AK Investment. Please proceed.
Hello. Congratulations, sir, for the great set of Q4 numbers. I have two questions. Yeah. So first question is, how much machines did we sell in Q4 of FY'26 and full year of FY'26? FY'25.
1 second. 1,349 machines we have sold in Q4, and a full year is 4,072.
Okay, sir. Okay. Fair enough. And sir, what is our revenue and EBITDA margin guidance for FY'26? Can we sustain the same growth momentum in FY'26 for the EBITDA margins that we have shown in last quarter, this quarter, 31%?
So basically, if you look at that, Jyoti is not in a quarter-to-quarter look at the area, but let's say in an entire year, we are able to maintain the momentum and we are able to maintain the margin. Always I have told in my past call also, we will maintain the margin around 25%, and that will be sustainable over there.
Sure, sir. And sir, my last question is, how much order flow are we expecting in FY'26 across all our categories?
So basically, we are anticipating over here the similar momentum, and this will be, there is a lot of opportunities are opening up into aerospace and defense in this geopolitical situation. But today, we are almost, in terms of today's run rate, we have close to more than two years order book are there. And no customers are accepting to a delivery period more than 2 years. So जैसे ये delivery or execution improve होता जाएगा, order book flow also will increase accordingly like this.
Okay, sir. Okay. Fair enough. And sir, last one more question if I can ask.
Yeah.
There is one patent we have registered for HUMA. So can
It's called as a human machine interface.
Yeah, right. Human. तो उसके बारे में आप थोड़ा बता पाएंगे कि ये प्रोडक्ट से हमारे मशीन्स में क्या इम्प्रूवमेंट आ सकता है और हमारे मार्जिन्स इम्प्रूव हो सकते हैं कि नहीं?
Let me tell you, it's a very interesting question. See, basically, today the entire world in a CNC machine tool manufacturer are being constrained to use only with the 2 or 3 CNC controller manufacturer, one from Germany and one from Japan. And every manufacturers are using like that. Okay. And we are going forward, are going to manufacture a base in our Make in India and our own controller there. So today, this is our first steps towards to that. And the HMI, the front end of the machine, That we have designed at Jyoti's screen basically, and it is so user friendly. Basically, our vision was there to be made user friendly machine to be there. So all our operator and operator of the machines can be run very smoothly and very nicely. That's why we have designed and developed very unique HMI. There I am able to back to back to use any kind of a controller, but front end is so nicely that operator easiness to be there basically, and that's is the first steps to enter into complete our CNC manufacturing cycles to be there.
Okay, sir. Okay, great. Great to hear that. And my best wishes for the FY'26.
Thank you. Thank you very much.
Thank you. The next question is from the line of Kamlesh Bagmar from Lotus Asset Management. Please proceed.
Yeah. Thank Jadeja for the opportunity and strong set of performance and vision. Sir,
thank you.
My one question was on the follow up on HOMA. So if I if we compare it with ABB or FANUC grade monitors, so how much cost efficient it would be as compared to these two giants?
So basically, Kamlesh bhai, see this basically ABB is not a CNC controller manufacturer. It's basically Siemens. Okay, let me correct first you there. Siemens and FANUC is the main controller manufacturer today. And in the entire machine tool industries of the world there are these 2 to 3 companies over there. And in entire this machine, let's say in our entry level product, this controller cost is contributing close to a 20 to 25%. In a middle level machine is close to a 15%, and high end is close to a 10% or less than 10% like that. It's a huge big cost. Okay. And there is a great opportunity to value addition over here. So we are looking to be a very in future to be a backward integration, and based on that we are looking to be a good value addition so that we can enhance our margin furthermore from here basically.
And sir, secondly, in this year we had a realization per machine of 44,63,000 rupees.
Correct.
We had a margin EBITDA per machine of around 12,05,000. So are we, the current order book which we have, so would we be able to maintain those margins going forward? And do we expect further add up because of this HOMA coming over?
No, HOMA is just a first step basically. Okay. That is just a beginning of we need to develop the controllers and all. It will take another 2 to 3 years time. Okay. It's fully integrated into manufacturing cycles and all. It's going to be another 2 years. It's just a beginning. HOMA is it's a first step basically. All our customers, उनको user friendly होता जाएगा धीरे-धीरे करके. They should accept, adapt, and like that. Okay, this is the front end of the machine that basically is operating systems. What you say in a computer is an operating system. This is an operating system basically. Okay, so that we will see into coming years like that. In terms of your first question regarding the average realization. So based on the order book, we are in line with that to maintain the similar average realization in FY'26 over there. Hello?
It seems like the participant's line has got disconnected.
Okay.
Shall I proceed with the next?
Yes.
Yeah, sure. The next question is from the line of Saloni Jain from Nirmal Bang PMS. Please proceed.
Yes. Hi, sir. Am I audible?
Yeah. Hi, Saloni.
Hi, sir. Firstly, congratulations on a great set of numbers for Q4.
Thank you. Thank you, ma'am.
Yes. So my first question is, we talked about growth catalyst coming in form of EMS and semiconductor for us, right? So could you please address the question of TAM here for both EMS and semiconductor, and what kind of a right to win can we see here going forward?
So basically, let's say whatever the order book we have been built on electronics manufacturing, that we are able to execute nicely on a second half of this year. And on a similar time, we are working with the many projects. Many qualifications are going on, and we are expecting to be a robust order intake in this year on a similar sector over there.
Okay, but in terms of import substitution, what is the kind of opportunity that we are looking at?
So basically, in let's say in India still today is close to 60% of India's consumption is imports there.
That is for EMS and semiconductor both.
Total. This is a total machine tool consumptions today. Okay.
Oh, right. Okay. And so my
and right now for the electronics and the semiconductor equipments are 100% being imports. There are no manufacturing in India there.
Okay, so we are the only manufacturers there.
Right now, many people are entering over here. We are the first entering over there, basically.
Okay. And so my second question is, you talked about the capacity that we have right now, 6,000 machines, and we are currently running at 90% utilization.
Last quarter, sorry, you finished your question. So, yeah. Please.
Yeah. So, yes. So while the additional capacity of 10,000 machines is supposed to come in 2 years, right? So, given this capacity constraint that we have, how would you like to guide for the growth going forward? Is it the correct understanding that we might see a lower growth for the next 2 years before the new capacity comes in?
So let's say this capacity comes in a picture only on a last quarter. Okay. So last quarter of FY'25. And this quarter only we are able to clock this as an 90%. So overall capacity being utilized, okay, is 65%. Still, I have a room to grow up to 35% over here in this year.
Okay, got it. Thank you, sir. Those are my questions.
Thank you. The next question is from the line of Mayank Chaturvedi from HSBC Mutual Fund. Please proceed.
Yeah, hi sir, good evening.
Hi Mayank.
So first on the EMS revenues, this quarter again, there has been zero revenue booking for the last 2 quarters. Also, a subdued revenue execution has come in. So could you just throw some light on the slow execution on this order book, please?
So basically, our delivery been asked of this order book is starting from this financial year on second half over here there. So it was not been asked because that all the plant is under construction at customer side there. Okay. Once the plants are being ready, then we are coming to pictures and we need to supply from our side there.
Okay. Is the customer still facing those machine issues from China, or are things easing there?
See, basically, in this area, we are also just entering. Until today, all the machines has come from Japan. Yeah.
And so on the capex side of this new 10,000 machines, it was earlier understood that it would come in by the end of FY'26, but now seems like it's being shifted to FY'27. Is it because of
no, I'm not shifting, and I'm not shifting. This is basically, I said 2 fiscal year, okay, 2 financial year. So this will be coming on a FY'27 in the beginning, maybe in June. We'll be ready there in 26 there. Okay.
Okay, sure. And so
We are not going further there. So this is just I said 2 years because in my presentation it was written 2 fiscal year in the past also. So I'm continued spelling out like this. Okay.
All right, got it. So just 2 bookkeeping questions. Can you just give us a breakup of this 1349 machine sales that you've done in entry level, mid level, and high end machines, please?
1 second. And the last quarter now. Yeah. So in entry level machines, we have done in terms of a value is 218 crores and 1,107 machines. On a mid level, we have done 74 crores at 165 machines, and high level is 252 crores and 77 machines. This is a combination of 1,349 in a Q4, what you asked.
Got it. Okay. So it looks like the high-end level machines realization has really fallen. Any comments on that? It's
What you said?
32 million. High-end level machines, 77 machines at level 252 crores.
252 crores. So basically, when we say that it's a high-end means 2 crores and above and different model mix up. Yeah. Okay.
No, why I'm asking is because your aerospace and defense revenues has grown quarter on quarter. So I was of the opinion that maybe.
So it's a value is the per machine value is a 3 crore 27 lakhs.
Mm-hmm. Right. Okay. All right.
Yeah. So per machine is 3 crore 27 lakhs.
Okay. Got it. Last question from my end. We've seen other financial assets have grown significantly. Financial assets. Can you tell us why? What's the component that's driving this increase?
So basically, there is a percentage of completion. See, these are the long, that all this aerospace and this large machines, the contractors, the machine value is more than 20 crores and very long manufacturing cycle. Okay. So those are the machines are been built up. Let's say we are starting the percentage completion methods, and that's why it's become it's showing into a financial assets to be there.
Okay. So as contract.
So now let's say we started 18 months back. So now it's completely pipe has been full. So regularly this kind of now dispatches happen there. Okay.
Okay. Sure.
Yeah.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Aniket Jain from Yes Securities. Please proceed.
Hi, sir. Can you hear me?
Yes, Aniket.
Good afternoon, sir. Actually, I wanted to check that there's a lot of traction going on in the defense industry. So are you seeing any increased inquiries?
Sorry to interrupt you, Aniket. Could you please come closer to the device while asking a question?
Is it better now?
Yes.
Yeah.
So I wanted to check that there's a lot of increased traction in the defense industry currently. So are you seeing any increase in inquiries or any pipeline that you're expecting for the next year or a couple of years?
Oh, it's a huge pressures are there. All our existing customers are pushing us like anything today.
Mm-hmm.
It's already started in Europe, largely in India, even now China. So every area now, everybody is expanding their budget, and there are a lot of pressures on us to expand our capacity to deliver faster there. Basically, we are working on that.
So would it be fine to assume that a lot of capacity utilization will happen in probably defense and followed by EMS once the EMS portfolio picks up?
Correct.
Okay. And the second one would be regarding the U.S. expansion plans. I remember that you mentioned opening a sales office there. So I wanted to check whether there's any impact of tariffs that might happen to your portfolio there.
No. Basically, the tariff is still an open area. And now we are going forward. We were just, let's say in the last couple of months, we were waiting to clarity on that to go to US to open our sales and network there. And if anything is, let's say, adverse, then we will go and start to have some manufacturing there also. But now I think the things will be very soon be clear. There is no tariff effect much on our product over there, basically.
Okay. So your US expansion plans.
We are basically on a gain side. We are going to have a better. Right now, US is importing in some other countries like Japan and Germany, Europe, and to China and all. These are the main suppliers. Against them, India is in a good position, sir. Though there is not any adverse situation, we'll be on a better advantage situations to be there.
Got it, sir. These are two from my side. Thank you so much, sir.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang Securities Private Limited. Please proceed.
Yes, sir. Thank you for the opportunity again. My question on these new product launches in FY'25, where they launched almost 8 products. So can you talk about the potential market opportunity, and secondly, whether these products seems to be margin accretive in nature because these are value-added products from the current portfolio. So can you talk about the profitability as well as the market size opportunity in the FY'26-27?
Yeah. So basically, if you look at that, we have a 2 products that we have developed on a 5-axis precision machining area. Particularly product called as a GU8. The GU8 and then another product called as a Tachyon Beta. Okay. On a similar product, okay, a market size in the worldwide in a EMS, aerospace, and particularly on a healthcare industries, it's a very large opportunities are there. And India is also coming up more and more healthcare component manufacturing, all implants and everything. And worldwide, this product market size, okay, on a similar area and all, worldwide it's close to $3.7 billion market size are there. So we are expecting the participation to get the orders from there. And yes, this is our coming the machine is to be on a mid to high end market, so we'll have a better margin over here basically. Apart from there is one more product we have built is called as a alloy wheel turning machine. It's basically in automobile industries, and mainly the EV sectors are coming, and the EV cars and everybody's are more and more, and all the cars are moving towards to alloy wheel. Until today in India, there was all alloy wheels people are importing and now started manufacturing over here. So this is a product to our entry-level product baskets, and there our margins are mid-range margins are there. Then other product what we have built is called as a BTM and ATM and HMCs. This also is an automation product because today more and more people are looking to be an automation in India. So this is also on a middle range product, and we are expecting to be a margin to be improved over here there. Okay.
Okay. And the second question on this semiconductor foray. So what will be the capital allocation from Jyoti's balance sheet for this venture? Initial capital commitment for that, like this venture.
So right now we are not we not reached to an infrastructure level. Today we are designing the product. We are working with the 2 or 3 manufacturers right now. Those are our potential clients, and we are developing equipment for them. and it's a very high precision manufacturing components and the assemblies are there. We will be quantified this in the next couple of quarters. Let's say we are expecting to be in a third quarter, we are able to see the complete roadmap ahead on a semiconductor, how much the plant needs to be expanded and how much revenue can be generated. That will be clear-cut visibilities will come end of this financial year to us.
All right, appreciate for the answer. Thank you.
Thank you. Before I take the next question, I would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Harshil Sheth, an individual investor. Please proceed.
Hello. Hello.
Yeah, Mayor. Yeah, perfect.
Yeah, hi. Hi. So firstly, congratulations on the great set of numbers. So just wanted to understand that the company is closely making somewhere around 16 crore of revenue, but it is still sitting on a 800 crores worth of inventory. So could you just justify this? Because I guess there are too many different model sizes and variations in your product categories, but still the inventory level is pretty high. So just to understand,
So basically, I'd like to, I'll tell you one thing. So it's a very good question, Hassan. Basically, in the early days, let's say we have improved a lot on inventory days. Earlier on let's say in FY'24, our inventory days was close to a 236 days was there. And that has come down to be 180 days. With this volume increase and model mixes improvements and all has happened. And that's how we are able to sustainably improve from last year to this year. And in terms of the nature of that, we are fully a vertically integrated manufacturing company. And from castings to machining to assembly, sub-assembly, and for entire this value chain we are doing. And we have a 200 plus product variants. So that's how these are the inventory you look like to be, you feel it is higher. But we are on a very good improvement stage from 234 days to we come down to 181 days today.
So going forward, do you see any improvement on the inventory days and that effect?
Yeah, so we are already we are working on to that, and we are anticipating to touch. This is going to be around 150 to 160 days in next coming year there. And that should be the the finest bottom level situation there.
Okay. Thank you.
Thank you. The next question is from the line of Mayank Chaturvedi from HSBC Mutual Fund. Please proceed.
Okay. Yeah, hi sir. Thanks for the follow-up. In the EMS space, again, some of our competitors are talking about introducing machine set capable for customers in the space. Are you seeing any increased competitive intensity there or any serious competition emerging in that space?
See, Mayank, I am myself as entering onto that and competing to a Japanese builder there. Okay. So it is so large business. If any competitors comes today also, I will not to be worried about that. I have to make worry to others first.
All right, sir. And so recently there was a press release by one of our customers' parents in Taiwan that one display model facility will be set up in the southern part of India. Any discussions going on there, or is our product Tachyon, can that be custom made to cater to this plant that has been announced recently?
I'll tell you, I have Mayank, I'm not able to tell you the detail more because it's a very confidential agreement I have with there. But the many project on a TechCon, I'm working with the many different applications on a similar product line there. And to be even for the modified the machines, the different hybrid structure like the 3D printing and machines together and all kind of a combinations are going on. I'm not able to tell you much more about that because it's a very confidential parameter to be there.
No, sir. All right, I understand. That's hearty to hear. Thank you for answering my questions.
Thank you. The next question is from the line of Vaibhav Shah from Nirmal Bang Equirus Securities Private Limited. Please proceed.
Thank you very much for the opportunity, sir. Sir, my first question is related to Huron. So during the last call, you have highlighted that there is new building construction or the debottlenecking activities is going on. So, and all the approvals are were expected during the May 25. So, are we on track here or is it fully operationalized now? And if yes, so what would be the total revenue potential here?
Yeah. So basically, in Huron, the building construction is over. The final, the installation is going on, the crane mounting and electrifications and everything is getting over in the next couple of days. And I told you in the last call that we will get everything into May and June. And almost we are on a track onto that until today. Okay. And with this, our capacity will increase up to $80 million worth of production manufacturing there.
Okay. And sir, just one question about Huron. So what was the full year revenue and EBITDA for Huron, and what is the outstanding OB for Huron at FY'25 end?
So basically at Huron, we have a close to 200 and net 265 lakh. Revenue. 253 crores of revenue and close to 865,000 euro. It means close to 8 crores. 8 crores as an PAT level there.
Understood. Understood, sir. Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Dipesh from Invesco. Please proceed.
Yes.
Hey, hi sir, how are you?
Hi Dipesh, how are you?
Yeah, very good. Sir, I just wanted to check, the last year we spent around 310 crores and we increased the capacity from 4,400 to 6,000 machines, right? So just wanted to check, will 450 crores that you guided will be enough for 10,000 machines?
Yes. Because there are many things are being mixed. Let's say while I'm making the expansion, so let's say in one building there is a space like that on a last capex also there. So there is a synergies to be there, and it might be like this. It's not an absolute number there, okay? Or not to be. आप समझ सकते हो मैं क्या बता रहा हूँ?
Understood. Yeah. You've done the groundwork and basically
assembly area.
Yeah.
Let's say we built up an assembly area, but I cannot build assembly area for just 100 or a 200 machine. There will be large area, so that is available there basically.
Okay. And you said
let's say you can see that from 6,000 to 16,000. So consolidated we need 450 crores like that.
Okay. And you said that this capacity will come by June of next year, right? That is how to look at it.
Correct.
Okay. And will entire capacity will come in one go, or we'll see 5,000 plus 5,000, something like that?
No, it's in one go.
It's in one go only.
Yeah, because there are very integrated the assembly and manufacturing line we are putting up there, particularly machining and all. We are doing a lot of automations over there. So once it will be start fully there basically.
Okay. And sir, lastly, I think our order book has been very consistent for the last 3 quarters. And EMS order, I think, came in Q2, and we have not executed any of the orders in like Q3 and Q4. And I think our capacity got increased in third quarter only, right? Towards the end. So why we are, so why we are not executing that order, and why not any new orders coming?
Basically, we are not, this execution is not been constrained about our capacity over here. Okay. So my receiving end of the customer, there are a lot of infrastructure development is going on there. Once they will be getting ready, they will allow us to, let's say they will ask to deliver to them then after. And
when do you think that they will be ready, sir?
I think this year we are looking to be in September, August, September.
Okay. Understood, sir. Thank you so much.
Thank you. Ladies and gentlemen, we take that as the last question and would now like to hand the conference over to the management for closing comments.
Thank you very much to all of you. Thank you.
On behalf of Equirus Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.